Chinese government has promised to back Nigeria's request for an increase in currency swap line, urging Nigeria to issue a panda bond in China. China's Foreign Affairs Minister Wang Yi, who is visiting Nigeria, said this in Abuja on Thursday after meeting with President Bola Tinubu. Yi stated that the currency swap agreement shows how well we have carried out our financial cooperation and sustained its momentum. He added, saying we will favorably study and consider the issue. Our cooperation is going well in many ways. Johnson Chukwu joins us now. He's Managing Director of Cowry Asset Management Limited. Good to have you on Newsday. Thank you so much for joining us.
Thank you and good day. Happy New Year.
Happy New Year. So what do you make of the president's call, for China to increase the $2 billion currency swap between both countries? How will this benefit Nigeria?
Well, what I make of it is that, remember that China is Nigeria's largest import market. As we speak, China accounts for about 24.36% of Nigeria's total imports. So if the currency swap puts about $2 billion, third quarter of last year, Nigeria's import from China was about $2.3 billion. Which means if that is enhanced, it will further increase Nigeria's trade transactions with China, but most importantly, it will reduce the cost of financing those transactions for Nigerian importers. So if they can actually import from China with their naira, so they will not be exposed to currency exchange risk, but most importantly, payment, there's also delayed payment benefit. What that means is that for Nigerian business that are importing mostly raw materials from China and some finished goods, their cost of goods will reduce, which ultimately will lead to a lower cost of goods on the shop floor. Because if they have a lower landing cost of their products, they will be able to pass it on because of competition in the economy. So I think an increase in the currency swap will benefit not just the merchants or the importers or the traders, but will also benefit the economy at large.
Could you explain to us a little bit more if and how it can help with our Forex crisis?
Okay, basic thing that happens is that when you have a currency swap, what happens is that you are not required to part with dollar at that point. And like I said, of the 14.6 trillion naira import we had in the third quarter of last year, about 3.56 trillion naira was from China. So, and if you convert it to dollar, about $9.5 billion import we had last year, third quarter of last year, the last 3 months of, that is third quarter of last year, between July and September, $2.3 trillion was from China. It then means that we will not be required to pay that $2.3 billion immediately. And it's only when transactions are cycled out, which is much delayed, that we will need require to pay part with value. So if, similarly, that China imports any goods from Nigeria, the import from Nigeria or the export to China will be used to offset whatever negative balance we have with them. And the way currency swap works is that the Nigerian importers will pay in naira. The Chinese government will ensure that the Chinese exporter gets the yuan value of the goods exported to Nigeria, and then a balance is held between the Central Bank of Nigeria and the Central Bank of China, or the People's Republic Bank of China, such that a settlement is done at subsequent date. We do not need, that means we're not going to draw down on our foreign reserve to settle that trade at that point in time. And that's the benefit of it, that the benefit of delayed payment, even if it does not eventually settle to the extent that their import offsets our import. Ultimately, because you need your dollars, even if you place those dollars, you will get some interest return on it. But most importantly, we will be able to have an accretion in our reserve over that period of time. And until the settlement time is due, you do not need to part with dollar. So we could have a build up our dollar reserve, and that will bolster investors' confidence on the Nigerian economy.
But then, are there any disadvantages to this deal? For instance, could it maybe boost our debt portfolio, especially at a time when there are fears that China's interest in Africa might be a subtle form of a new form of colonialism?
Well, it does, but it increases our spontaneous borrowing. Spontaneous borrowing has the benefit that there's no interest attached to it, in the sense that what you're eventually going to be looking at is that the Chinese government, if we use the third quarter import as an example, the Chinese government is actually lending about $2.1 billion to the Nigerian government or to the Nigerian entities without any interest rate obligation or interest cost obligation. So there is a debt that has to be paid, but ultimately there is no cost to that debt. That's what you call a spontaneous credit. But most importantly, a $2.1 billion in a quarter is not so huge as to constrain Nigeria's ability to pay back. And bear in mind that a lot of the imports we are making from China are equipment. So if those equipment goes into productive activities and are used to produce goods and services, and maybe part of those goods and services are also re-exported, we may also get some foreign exchange earnings that will be used when there is time for settlement, when the settlement time is due, to pay back part of those spontaneous credits. But the benefit of spontaneous credit is that there is no interest cost attached to it. As long as you do not build it up to the extent that you're not able to liquidate, which is why there's a limit to that currency swap. Currently, we're looking at about $2 billion. The president has asked for an increase above the $2 billion. So the benefit of it is that at least if we have a currency swap that accommodates our entire quarterly import from China, then we have the benefit of not paying on time as long as that import is going into either valuable consumption or valuable productive activities.
And with knowing all this, in 2025, how should investors and businesses position themselves to get the best of this?
Well, for investors, particularly those merchants, those traders that import from China, what they will now need to do is engage their export partners and key it into this currency swap. The export partners must be registered, must actually be registered with the Chinese government as a beneficiary of the currency swap. Because like I said to you earlier, when a currency swap transaction is done, a Nigerian importer will pay Naira to Central Bank of Nigeria. Central Bank of Nigeria will avail that balance to the People's Republic Bank of China, and the People's Republic Bank of China, through the advising bank for the letter of credit, will ensure that the exporter in China is paid in yuan. So the exporter in China is completely, he doesn't have any outstanding assets that has to be paid because he gets his value. So the settlement is done between the Central Bank of Nigeria and the Central Bank of China. So, but if you are not part of that scheme, you are not going to get that benefit. So Nigerian importers have to get involved with, notify their bankers that they want to be part of the currency swap, and their banker, they will also need to notify their export partners that, and then ensure that they are in the value chain of this currency swap.
But how well would you say Nigerian businesses have utilized this deal in terms of exports, seeing as Nigeria is mostly import dependent?
I think that's actually the big issue. The key thing we should be looking at that, beyond the use of this currency swap for import of finished goods, the government needs to probably have some conditionality attached to it, so that the currency swap is used for import of goods that have more beneficial impact on the economy, particularly what we call capital goods. That is equipment for manufacturing activities. And Nigerian government should also encourage Chinese export companies, export-related companies, to set up their operational base in the country, so that even if their operational, their local operations are also enjoying the benefit of this currency swap, we are moving toward the domestication of some of the goods that we currently import. The key thing we should focus on as a part of our economic development agenda is to domesticate a lot of the imports we are bringing in from China. That's how China developed. What did China do? China became a manufacturing base for the whole world. Technology was transferred to China. from Western countries. China adopted the technologies and advanced them. And today, they are basically exporting everything to the world. So we need to ensure that we're not just importing finished goods from China, we are rather importing capital goods, that is equipment from China, to go into productive activities that will also ensure that in the medium to long term, we will reverse the negative trade balance in favor of China.
And just to see into the future a little bit, how soon should we expect to see some of the dividends of this and the effects of this in Nigeria's economy?
You know, the currency swap has been there for about 5 years or thereabout. I think obviously more than 5 years. And unfortunately, like I said, until we domesticate and put conditionalities so that the currency swap is largely used for importation of capital goods. If the currency swap is still continuously used for importation of finished goods, we know that importation of finished goods, like we say in economy, that the imports the leakage does not really lead to diversification of the economy, does not necessarily lead to improvement in economic activities and productive activities. So I believe now that we are engaging in this conversation, the narrative will be for the federal government to put conditionalities for the utilization of this currency swap and ensure that those who have access to it are those who are bringing in capital goods. That's when we begin to see the benefit in the economy. We know that if you continue to import for consumption purposes finished goods, the benefit is at best improving standard of living of citizens, but ultimately that should not be the narrative that we'll be pushing. The narrative should be, let either Chinese companies come here and establish their productive base to supply to the local market, or Nigerian importers should ensure that they go into partnership with their export partners from China to set up manufacturing bases, and it's only those who have those infrastructure that will have access to the currency swap.
Mr. Johnson Chukwu, Managing Director, Cowry Asset Management Limited, thank you so much for joining us on Newsday.